But the prices paid spiked up, highest level in 2 years. Obviously, there's a lot of inflationary pressures that have been building. That means a huge reduction in real rates. And that is very negative for the dollar, and that is very bullish for gold. And traders just haven't, connected the dots yet. Prices are surging all around the world. Yes, we had a pullback in commodity prices as the Fed was initially tightening, but that's reversed. And again, we've had strong commodity prices, even with a strong dollar.
In today's news recap, UBS stays bullish on gold for 2025 as central banks fuel demand surge. UBS predicts gold's 2025 rally could defy rate cuts and a strong dollar, fueled by central bank demand and economic uncertainty. UBS, the Swiss multinational investment bank and financial services giant, has offered an optimistic outlook on gold for 2025, despite the metal losing some momentum in December following the U.S. Federal Reserve's hawkish stance. During its policy meeting in 2024, gold surged by 27.6%, marking one of its strongest annual performances in over a decade and surpassing the S&P 500's returns. While the Fed's tone caused short-term headwinds, UBS analysts remain confident that gold's upward trajectory can continue into the new year, supported by structural economic factors and ongoing central bank demand. We believe gold can build on its 2024 gains. Although U.S. rates may fall less than expected, they are still on track to decline. UBS's chief investment office highlighted central banks' significant role in driving gold demand. The forecast reflects increasing diversification and de-dollarization trends among global central banks. Despite potential challenges, including fewer anticipated rate cuts and a stronger U.S. dollar, UBS maintained a positive stance. Reflecting the shifting economic environment, UBS lowered its 2025 gold price forecast by $50 per ounce. The bank now projects gold will reach $2,850 an ounce by the end of 2025, down from its previous estimate. Despite this downward adjustment, gold was trading at $2,639 per ounce as of last week, indicating UBS still expects the metal to rise, albeit at a slower pace than initially anticipated. Before we dive into the best clips of the week, don't forget to smash that subscribe button and check out our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest, most reliable service to secure your data and keep prying eyes away. Plus, if you're a stacker looking for truly independent market insights, visit goldsilverstacks.com for the Stacker's Handbook, a comprehensive guide packed with strategies to safeguard your financial future and take control of your wealth. And by popular demand, we've launched our print-on-demand gear for gold and silver stackers. From stylish apparel to unique stacker-themed accessories, it's the perfect way to represent your passion for precious metals. Premium quality, shipping worldwide.
Now, the probability of rate cuts declined today after the release of this hotter than expected inflation number. And as soon as it came out, gold, which was up about $25, sold off. And it still ended up, positive about 13, 14 bucks on the day. The dollar, which was down this morning, and actually had a big pop yesterday. The dollar rallied. I'll get into that after the break on why the dollar rallied. But the dollar sold off as soon as this hotter than expected inflation numbers came out. But it's not just the inflation numbers themselves that caused the dollar to rally, but it was the reaction in the bond market where the bonds were hitting new lows for the year on this news. And that increase in bond yields is propping up the dollar. But that's not good for the dollar. The currency traders still don't get what's happening. Bullish for the dollar. Well, that's not what it indicates. I've been saying this all along. It doesn't indicate that the Fed has to fight harder to win. It indicates that the Fed has already lost. Inflation won the war. And this is not bullish for the dollar. Inflation is going to keep getting worse. Yes, it may slow down the rate cuts, but the Fed is not going to hike. Even though it never should have cut rates, all 100 basis points were a mistake. They're not going to be able to correct the mistake, because to do that, they're going to look so foolish if they have to do that. But not only do they have to take away all 100 basis points, they need to have rates significantly higher than where they were when they started cutting. There's no way the Fed is going to do that. The only thing they're going to do is slow down the cuts. I can't see Powell hiking rates at all, even though he should. But he may not cut. But that's not bullish for the dollar, because if inflation keeps getting worse, and so instead of 2 or 3% inflation that people were expecting, we get 5 or 6 or 7% inflation, and the Fed just keeps rates where they are, that means a huge reduction in real rates. And that is very negative for the dollar, and that is very bullish for gold. And traders just haven't connected the dots yet.
In today's news recap, silver price surge expected in 2025 as UBS predicts $38 target amid industrial strength. UBS anticipates silver prices climbing to $36 to $38 per ounce by 2025, driven by falling U.S. yields, robust industrial recovery, and stronger demand. Despite recent headwinds, the metal's dual role as precious and industrial could fuel its growth. According to investing.com, silver prices are expected to increase in 2025, according to UBS, which is boosted by lower real rates in the United States and higher global industrial production. This is despite the fact that the metal is struggling to match the increases spurred by the central bank in gold. Silver prices increased by more than 20% in 2024, but they have recently lost impetus as a result of increasing yields in the United States, a strong dollar, and growth concerns in global markets. With speculative short positions expanding and ETF holdings stabilizing following major outflows earlier this year, the metal is trading near its 200-day moving average. This represents a positive development for the market. In spite of these difficulties, UBS continues to retain its positive stance, with a target price range of $36 to $38 per ounce for the year 2025. Although rising yields have been a disadvantage, a decrease in yields might potentially improve the desirability of silver. There is a need for a shift towards cyclical commodities, which UBS anticipates will become more prevalent as the year 2025 progresses. Dual roles of silver highlight its market potential. Despite the fact that silver's association with gold continues to be high, the fact that it also moves in tandem with industrial metals highlights the fact that it serves a dual purpose as both a precious metal and an industrial metal. Now we'll show you the best clips of the latest interview, but first, smash that subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than the cost of a Financial Times paper, you can protect your online activity from prying eyes with the most reliable VPN on the market. Trust me, the only thing you'll regret is not getting it 6 months ago. Enjoy the episode.
Prices are up 28% in 7 months, and that's in dollars. They're up more in euros. They're up more in Canadian dollar. Dollar's been strong. So commodity prices are surging all over the world, right? In Europe, they're up over 30%. Christine Lagarde had a Twitter or an X post. She had a little video of herself. She's head of the ECB, and she greeted everybody by saying, 2025 is going to be a great year. This is the year inflation is coming back down to 2%. I mean, what is she smoking? It's first of all, it's about 3% now, but it's headed in the other direction. Prices are surging all around the world. Yes, we had a pullback in commodity prices as the Fed was initially tightening, but that's reversed. And again, we've had strong commodity prices, even with a strong dollar. So imagine how much stronger they're going to be when the dollar weakens, which eventually it is going to turn down. And, this is despite oil. We're at a 14-year high. So oil has been a lot higher than $74 a barrel in the last 14 years. It's been well above 100. So oil is one of the bright spots in this dark cloud here of prices. Other commodity prices. Look at coffee prices, right? Look at sugar. Look at cocoa, right? And other grains are starting to move. Look at soybeans. Look at corn. All these food items. Everything is surging in price. At the same time, the Fed and the ECB, they're all saying, hey, we've won the inflation battle. We just want to make extra sure that we're down to 2%. They're not even close. And the bond market is starting to sniff this out. The yield on a 30-year U.S. Treasury today rose above 4.9%. We're at 4.92%. The yield on a 10-year is 4.69. So these are the highest yields that we've had since the Fed started cutting rates. In fact, you have to go back even further than that. But again, this does not surprise me. This is exactly what I was saying was going to happen even before. But we are moving substantially higher. Mortgage rates now are back above 7% and rising. They're going to be above 8% pretty soon for a 30-year fixed rate mortgage. But they're back above 7. Credit card rates are 25%. They're going to keep going up. Now, we got more bad news. I mean, forget about the fact that the mainstream media is ignoring this boom in commodity prices. I mean, which is completely inconsistent with the story the Fed is trying to sell. How can they be telling us that inflation is going to come down when prices are soaring? And these commodities, these are input costs. So they're going to bleed in to producer prices and consumer prices, right? They're going to move first. And then you're going to see it going, up the chain. So these are leading indicators. So how could you ignore? The last time we started to see commodity prices surging like this, it was before inflation really ran away. And then in the face of it, the Fed was still claiming that inflation was transitory, even though commodity prices were showing that that wasn't the case. Well, that's happening again. Now they're saying that, inflation's gone.
Do you agree with Peter's take on the Fed's hawkish pivot, the future of gold and silver, and the potential fallout for markets and the dollar? Or do you have a different perspective on how these policies will play out? Share your honest thoughts in the comments below. We want to hear your opinion on this evolving situation. Let's keep the conversation going and explore what these developments mean for all of us navigating these uncertain times. Don't forget to like, subscribe, and hit the bell icon to stay updated on our latest content. See you in the next episode.